Welcome to the One Africa, One Wallet webinar, where we are talking about integrating financial systems through digital infrastructure. And we have some key people on the call. These are leaders in their field. We have some key people in our field, in their fields here today. And my name is Sophia. Wokoji. I'm going to be your moderator for this webinar today. Thank you so much for joining. Thank you for taking out the time to join us. And I hope that you learn a lot. If you have any questions while the speakers are presenting, or if there's anything on your mind or comments, please leave it to the chat box and we will definitely answer your questions. So first, I want to welcome the people that we have on the panel today. We have our CEO and co-founder, Seyi Akamo. We have Mr. Hilary Daudu, who's a leader in his field. I'll do a proper introduction when we're going into his presentation. And we have Hartley Ochuba, also a strategy and transformation leader. So we have really top people on this call today. I'm super excited to learn. If you have anything on your mind or things that you're hoping that we talk about, please leave it in the chat box at this time so that we know that we're covering all the areas. I want you to have expectations for this webinar, so you're going home with a wealth of knowledge. So just to start off, I'm going to bring up our CEO. If you can clap. His name is Seyi Akamo. He's going to be taking the welcome address. Hi, Seyi.
Hello, good morning. Good afternoon, everyone. All right, good afternoon, everyone. So let me just start by, my job is quite easy. What I'm going to do is to introduce the geniuses behind the webinar today. What I want to do is to just set the context. So the year is halfway done, right? We're in June of 2025. And what you'd realize is that all of the trends that we started the year with, right, we've sort of reached our settlements, like our equilibrium with regards to what is sticking and what is not sticking, right? Definitely the year started off, and we know what the winners are when it comes to the trend. On the global stage, we've got artificial intelligence. I like to narrow it down to within Nigeria. We know that in August, for those of you in the financial services, there is a regulation with regards to open banking in the financial services space. And we know that that's a big thing or a big trend locally in the country. But also on the African plane, there's a lot more attention. There's a lot more interest in increasing Pan-African trade and strengthening up or creating new corridors for trade, right? And we're leveraging the African Free Trade Continental Agreement. There's a component of that, right? There's a component of that which speaks to allowing payments move seamlessly across border within Africa. It's a key component to facilitate trade. It reduces the barriers, those logistics barriers associated with intra-continent trade. And that's what we would like to dig deep into today, right? Like Sophia said, we do have experts, Hilary, Hartley, who are going to go into those, who are going to go into that topic. We're narrowing down on that one topic, right? On the payments network for the African trade system, which is PAPSS, right? And what I encourage you all to do is to look at it as, how do you localize it for your businesses? In what ways can we start seeing ourselves move higher? Now, I said something earlier on the global scale, where on AI is really leading the way in terms of the big trends, and they've been delivering significant results since the year started, right? Pan-African trade is leading the way on the continental side, and that has been very aggressive since the very first month of the year, right? And within the country, open banking through the CBN regulation is leading the way in terms of opening up channels for interbank payments, settlements, innovations in that financial space. Now, what does that mean for you as a business owner? It means that we need to now expand, push the boundaries or push the scope of what we consider success will be. You can leverage artificial intelligence to scale in terms of technical know-how, in terms of technical depth within your organization, you can leverage that to scale up on that skill gap, right? You can leverage the fact of what we're talking about today. What networks and what places are we scaling, or are we automating payments, right? How are we crossing the payment barriers for the Pan-African trade? And then finally, we can leverage the newer innovations that will be rolled out within the country, right? Bringing this all together. If you're into manufacturing, don't think only about selling to one small segment or one corner of Nigeria. Start looking at it globally, because from a technical standpoint, you have tools that would support you via artificial intelligence. From a policy standpoint, you have on the continental region, policies that are being relaxed, opened up. A lot of campaigns are being pushed to support intra-African trade. And also on the local standpoint, you start seeing that there will be more and more access to API-based banking, right? So as we deep dive, I'd like you to localize this, think about this as to how it relates to your business, and start developing strategies to take control of these trends, right? So thank you for your time, and I'll let the show begin. Before I go, I also want to specially thank Hillary and Hartley. Both of you have taken time out of your busy schedule to prepare for this, and I want to say that from Turok, a big thank you. I also want to say that just to the rest of everyone listening, that we have deep technical knowledge here. So please put your questions forward. I know Hillary a very long time, and he was actually one of the teams that was with the planning and then the design phase of what he'll be talking about today. So I'll let him handle that. But I just want to say in front of everyone, thank you guys for making the time out for this. So Sophia, over to you, and everyone, hope you enjoy your next hour or so with us.
Thank you so much, Shay. And sorry. Okay. So we're moving on to the first presentation, and we have our first speaker, Mr. Hilary Daudu. And I'm going to just read through his profile to give you a bit of a background into who we have on this call with us. Hilary is a leader with experience delivering business and technology-based transformation for top clients and startups in the financial and non-financial services. He has a 17-year track record of developing and leading successful, large, complex business and transformation programs across several countries and thousands of end users. He's been a managing director. He set up a digital bank. He's been a chief operations officer. He's led transformation of group subsidiaries. He's led the implementation of a payment system and financial markets infrastructure across Africa. He's also led the articulation of strategy for payments companies and also been a payment lead for KPMG and a representative on KPMG Global Payments team. Welcome, Mr. Hilary. We're happy to have you and we're excited to learn from you.
Thank you very much, Sophia. Can you confirm that you can hear me?
Yes, I can hear you.
Right. Thank you very much, Sophia, for that introduction. Let me start by thanking Sheyi, Sophia, and team at Turog for giving me the opportunity to share my thoughts on some of the trends across the globe, in Africa, Nigeria, and specifically the Pan-African Payment and Settlement Platform. Just as Sheyi mentioned, this platform is something that's dear to me because I was also on the team that put together the design and also part of the implementation of the solution. So it's a discussion I'm excited about. So to kick off the conversation, and also thanks to the audience for making the time to join us today. To kick off the conversation, I want to start by asking the audience a question. How many of us have initiated a cross-border payment before? Can you just give a thumbs up if you've initiated a cross-border payment before? Doesn't matter within Africa, outside of Africa. Let's see how many thumbs ups we get. Okay, so 3. All right, all right. So some people in the room have an idea. Okay, some people in the room have an idea of the concepts, what it entails, at least from a user perspective. Great. To start off the conversation, I think it is important to begin with why we have such a platform in the first place, the problem. And Sophia, if you go to the first slide, if you look at payment transactions are an offshoot of economic activity, right? Without economic activity, you cannot have payments. In fact, wisdom in that sector suggests that if you're setting up a payment system, you should do it in such a manner that it aligns with the transactions or the business activity in your area. If not, you wouldn't have any transactions at all. So if you look at we looked at the top 4 African countries by economic size, and we looked at their trade activities, right? And we looked at Nigeria, South Africa, Egypt, and I think Algeria. Now, a look at the transactions will tell you that for Nigeria, for instance, Nigeria does something like $50 billion in trade for their top 5 trade activities. And out of that $60 billion, just about 10% of those activities happen with African partners. South Africa, $70 billion in transactions, about 27%. Egypt, say another $20 billion in transactions, and just 4% happens with African partners. And Algeria, about another $60 billion in transaction, and I think about 5% or so of those activities happen with African partners. This tells us that African countries are involved in trade activities with the rest of the world. They spend their time or engage in more trade activities with the rest of the world than they do with African countries. Now, this problem is compounded by the way cross-border commercial payments take place. Now, if you analyze the method by which cross-border payments are implemented, let's go to the next slide, please. Commercial payments are done mainly through corresponding banking relationships. And, the corresponding banking relationships, for those of you who are bankers, there's the nostro-vostro relationship where you have 2 or 3 banks between you and the recipient. Now, that conceptual arrangement operates mainly on the SWIFT platform. About 90% of transactions happen on the SWIFT platform, MT103s and 202s. Now, there are 2 types of concepts here. There's commercial payments flow and the financial payments flow. The commercial payments flow tells you where the transactions go to. Financial payments flow tells you which countries intermediate that payment. So which countries does the payment actually flow through? So to put it in context, right, if you go to Ahmad Bello Way, you have EcoBank there, you have GTB there. If I do business with Sheyi and I want to pay Sheyi using USD, assuming that I've aligned with all regulatory requirements from the CBN, if I initiate that transaction, the transaction will first go to either the US or the UK first before it comes back from GTB to EcoBank. It would even be easier and quicker for me to just drive to Ahmadu Bello Way, withdraw the money, cross the streets, and pay the money into Sheyi's account. Now, looking at the SWIFT data, right, just under 20% of transactions that are initiated from Africa come back into the African continent from a destination standpoint, which means 80% of the transactions happen with people outside of Africa. And out of that, only about 12% is intermediated by a counterparty within the African continent, right? 70% or 80% of transactions are intermediated outside of Africa. I think 39%, 30% in North America, 41% in Europe, right? UK, that 10% of the transactions. So that tells you, and what drives the cost of payments? What drives the cost of payment is the parties involved in making sure that the payment goes through, right? If there's one party involved, you have to pay one person. If there are 3 parties involved, you have to pay them. Now, imagine a payment with a country on a path that is not, that doesn't have high traffic. It means the arrangements are not well known. There isn't transparency. You are not sure when the payments will arrive. And you can send $100, and by the time it gets to your recipient, it's $80 that arrives in the account. Next slide. Now, to solve this problem definitively, you have to have a solid understanding of how payments are organized. And I mean, payment intermediation is organized on the African continent. And I'm speaking about large value payment systems now. The African continent, from a socio-political standpoint, is organized into various economic blocks. You have ECOWAS, you have Central Africa, you have South Africa, you have East Africa, you have North Africa. Now, in North Africa, you have the Arab Maghreb Union, right? With, I think, Tunisia, Morocco, a bit of the North African countries. They are organized in an economic bloc, but they don't yet have implemented, at least to the best of my knowledge, a payment system that straddles those countries. Now, in West Africa is divided into two parts. You have the French-speaking West African countries, and you have the English-speaking West African countries. The French-speaking West African countries, there are about 10 of them. They have a payment platform there called Star Yemoa, which is sort of like the system that they use, that their central banks use for cross-border payments within their countries and across the countries. In the English-speaking part of West Africa, before the implementation of PAPSS, there was nothing, but PAPSS has covered that space now. In Central Africa, you have Sigma, right, for the Central African French-speaking countries. In Southern Africa, you have Cyrus for the SADC group. In East Africa, you have two systems. You have East African Payment System for the East African Economic Community, and then you have REPS for COMISA, for the Common Market of East and South African states. Now, the question you ask is, with the presence of these platforms, what is the level of intra-trade that happens between them, right? For amongst all those various groups, ECOWAS Yemoa has the highest, which is 47%, and that's because all the central banks use that one platform, okay? Followed by SADC using Cyrus, it's about 16%. So that shows you to what extent having a common platform can impact first cross-border trade, and then of course facilitates payments. However, we don't have any platform that covers all those economic regions, because in the 54 countries of Africa, it is difficult to establish the first principle you require for a systematically important market infrastructure, which is a legal basis that will ensure that if I initiate a transaction from Egypt and it is terminated in Gabon, that those transactions are legal, final, inviolable, and cannot be reversed, even if the entities involved are insolvent. Next slide. Now, what is this PAPSS and how does it solve this complex myriad of problems? Social, political, structural, and so on. I'm going to use the model of a national payment system because we're all familiar with that. So to give you an idea of where PAPSS plays. Now, typically in the national payment system, you have people sending money to and fro using various channels, ATMs, online apps. Now, all your payments devolve into two types. They are either credit push transactions or debit pull transactions. Now, in a payment system, those transactions flow into payment streams, a high value payment stream or a low value payment stream. Now, each of the streams into clearinghouse have groups for checks, you have clearinghouse group electronic transfers, you have clearinghouse group for mobile money, as the case may be. And I'm speaking generally about the standard across various countries. And then you have a payment stream for high value payments, right? Now, those payments in those clearinghouse groups, what happens is clearing takes place. The process establishes the final obligation for each participant in the payment system or in the clearinghouse groups, which then goes to settlement. And typically it goes into an RTGS, where settlement happens either in designated time, on a gross basis or net basis, or instant, and same thing for whether if it's a cross-border platform, whether it's a instant payment, designated time gross, or designated time net settlement system. So PAPSS plays at the back end, at the large value payment system space for clearing and settlement of large transactions for direct and indirect participants. Now, in every payment ecosystem, you have those who have direct access to the platform, just like you have in various countries where you have banks who have direct access, and then you have like fintechs who have indirect access through the banks. Okay, so you have direct participants, indirect participants, and all those participants have their requirements, right? They have there's the due diligence that needs to be done before you can onboard, and there's the extent, there's the limit of activities that you can perform as a direct or indirect participant. So it's a similar structure. Now, what I've just described to you is then encapsulated in lots of different legal frameworks to ensure that there's legal certainty, there's settlement finality, there's inviolability of transactions. Electronic transactions are legal because in some countries they still operate on a manual basis. Electronic transactions are not legally binding, you know. So you need to make sure all of those foundational structures are in place before you set up a platform of this magnitude. Now, PAPSS rides on the Treaty of Afreximbank, which has been signed up to by, I think, 54 countries, which makes it legal for its activities in all the countries that have signed up to that treaty. So PAPSS has that legal basis, which is the first principle for a systematically important large system. In addition, across the globe, there are about 8 large value payment systems, systematically important. There's CLS Bank, which does 50% of the world's FX clearing and world FX exchanges, 18 currencies. I think the only currency in Africa that is on the CLS Bank is the South African Rand. You have Clearstream and Euroclear, which deal with international clearing and settlement of securities. Cyrus in South Africa, REP, EAS, REP, East African Payment System, Sigma, and SISTAC, and then you have PAPSS, which is envisaged to cover the entire African continent. Now, from a governance standpoint, is overseen by a committee of central bank, lead overseer being the Central Bank of Nigeria. There is a payment system committee that oversees the activities from an overpoint, which involves officials from those various central banks, and then you have, of course, the organization and so on. And you know, some of you might even know some of the leaders. I think the MD is a veteran. The veteran from the Nigerian payment system from one of our major companies here. Next. Now, from a technology standpoint, the PAPSS designs and connect directly to it, right? And for the sake of it has been designed such that it also has forward integration, backward. It's ISO 22 compliant. It has a system that allows us to use Swift transactions to connect to all the central banks. So imagine that the central bank is a general ledger that has all the that has all those central banks on it, right? You initiate a transaction, it checks if you have the right balance. It also checks if your bank has the right balance. Then it checks if your central bank has the right balance. And then within 20 seconds, you get payment confirmation. Settlement is done at a designated time. I think it's 1100 hours. Final across all the countries where the transactions take place. So the evolution of the payment has the standard functions of a large value payment system: account verification, clearing, settlement, database reporting, AML CFT checks, which I won't go into details of, collateral management, accounts, and different. So that, in a nutshell, is what PAPSS is. And system, a continent like Africa requires to be able to achieve its full potential from a trade platform, payment platform, and also from just releasing the potential within the continent. Thank you. Happy to take questions subsequently.
All right, thank you so much for that wonderful presentation. Wow, that was very insightful. I can say that, sorry, 1 second. I can say that I learned from this. Yes, please clap for our speaker. It's not easy to bring knowledge, this amount of knowledge and experience to us. So thank you much, Mr. Dari. We're giving you a round of applause for this wonderful session. And now we're going to bring up our second speaker. Please, at this time, leave your questions in the chat. We'll definitely ask questions at the end of all the presentations. So now for our second speaker. Sorry, 1 minute, please. Okay. So we have Mr. Hartley Ochuba, who is a strategic transformation leader with over 12 years of experience driving performance, innovation, and enterprise change across leading financial institutions. Currently serves as Senior Manager, Strategy and Corporate Transformation at Variety Partners, formerly Accenture Nigeria, where he leads and has led high-impact initiatives. He's also held leadership roles at Sterling Bank, where he spearheaded service, measurement and analytics, and customer insight programs, Diamond and Access Bank. He holds an MBA from Nexford University with certifications in business analytics, design thinking, and corporate strategy. Welcome, Mr. Hartley Ochuba. We are happy to have you.
Hi everyone. Good afternoon. Please, can you see me and can you hear me? Am I audible enough and can you see me?
Yes, we can hear you.
Okay. Hi everyone. Good afternoon. Thanks to the team, Sheyi, Sophie, and the entire Turok team. Thanks for having me here. Food for thought. I was looking at the picture that is displayed on my background and looking at my hair right now, and there's no hair currently on my head, but it's a beautiful one. Anyway, growth is consistent. Okay. Someone's laughing there. That's expected. So my name is Hartley, and I'm going to take over from Hilary. Hilary has given us a fantastic presentation. He's coming from a technical point of view and a data point of view, where he's trying to explain in technicality what the PAPSS system is all about. But I'll be coming from a banking point of view, where I'll be trying to make and put us through an understanding of what the banks in Nigeria need to do to forge ahead. Okay, Nigeria is more or less, whenever we talk about Africa in anything, is it music, is it finance, the first country that comes to mind is always Nigeria. So Nigeria always is the one that pushes most of the initiatives first. And if you look through the implementation of PAPSS from CBN circular, directing PAPSS usage down to the banks who have started to do something around that, you realize that most of our banks have started actually, trying to do some implementation. The first implementation or first thing that needs to be done will have to be some upgrade to the core banking system. And some banks have already started doing that, upgrading their core banking systems, etc. That's more or less the first step before a few things. So I'll be coming from a digital transformation point of view and strategy around Nigerian banks, how Nigerian banks should actually push PAPSS, and then the roadmap towards the full implementation of PAPSS. So can I get thumbs up, like at least 7 before I begin? 7 thumbs up, please. Don't mind my hair again. Oh, I look more handsome now, I know, but 7 thumbs up, please. Only 1. Okay, 4, 3 more, then we can go. Okay, that's fine. Okay, so Okay, Morton, fantastic. Let's push. If we're looking at it from a pillar point of view, there are 4 pillars to this. You have the vision, which we have tagged for this podcast as One Africa, One Nigeria per se. And then what is the enabler? What is the technology that's going to be used to enable this initiatives that we are pushing? Okay, and the technology, of course, as Hilary has described, is the Pan-African Payment and Settlement System, PAPSS, which will be the tangible infrastructure bringing the vision to life. Who would be the leader for Africa? Who would we start as a leader? Of course, Nigeria. We would be the ones to start to push this because you know, if you look through the data table that Hilary showed, you can see that how we are positioned as number 1 in terms of transaction volume and value across the African continent. So more or less Nigeria. And then finally, what do our regulators support this initiative? Yes, the CBN is highly in support of this. If I remember, a circular was pushed on the 28th of April, mandating the adoption of this, where they've put in a few things across. For example, the CBN has tried to simplify KYCs for smaller deals when it comes to FX trade or border trade across borders, right? Yeah, so the CBN is in full support of this. Next slide. Next slide. Okay, so so please come and go back. Yeah, thank you. So this is more or less a high-level description of what PAPSS is too, and what PAPSS is trying to address, right? Some problems and situations. You know, foreign currency reliance. You know, there's a lot of reliance in foreign currency across board when we're trying to do cross-border transactions. We rely on USD, Euro, etc. But this kind of limits that and gives us a preference across African currencies. Then, because of this over-reliance and the huge value and volume of our transactions, there's a high transaction fee and cost per se. You know, so PAPSS is coming in to try to reduce that cost. And then we have the complex correspondent relationships. I mean, to do transactions, like Hilary had said now, to do a transaction from GT to EcoBank, it needs to first go, if it's a correspondent transaction per se, right? It needs to first go to America before it comes to EcoBank, right? Now, you know, and I mean, of course, before all this is done, there's going to be a lot of correspondence. You know, you want to relate to individuals in the bank where it's hit at, you know, etc. You know, there are issues with timeline variances, you know. So PAPSS is going to eliminate that or try to reduce that, right, with a focus on African borders, so it makes things easier and then relationships better. Okay, next slide. Next slide. Okay, so I like this part. So let me stress this a little bit. Now, what will be the strategic opportunities for Nigerian banks? So Nigerian banks shouldn't see this as a compliance burden, but a strategic springboard. I'm going to use the word springboard here. It's a strategic pillar to push forward, you know, and enhance our gains across board, right? One, the banks would gain instant access to 54 countries in Africa, unlocking new trade corridors. There's also the idea to embed real-time cross-border payments across the different products that the banks have currently in Nigeria, e.g. the mobile app, the web services, right? You can also craft new innovations, for example, cross-border lending, you know, financial trade finance, etc. So there's a whole lot of opportunities here for Nigerian banks. But let me go through the slides so we can see what it is that we have here. So the first opportunity I've itemized here, like I spoke about, is market expansion. No, please go back to the slide. Yes, so market expansion and intra-African trade. Like I said, access to 54 countries direct access to vast FTA single market, and then new trade corridors. Then we have product innovation and digital services, real-time cross-border payments, tailored trade finance, future-ready offerings like what I talked about the lending across borders, etc. Then we have operational efficiency and liquidity management, FX source autonomy, where sourcing foreign exchange for PAPSS becomes is directly from local markets. We don't need to rely on cross-continental markets anymore. Then there's a reduction in the volume of funds that's crossing the border. I'm sure Hilary mentioned that too, where he talked about the data and the percentage of funds that leaves Africa and then the ones that come back, right? So this helps to curb that and reduce that amount of funds that leaves Africa. And then finally, we have financial inclusion, where we will use this opportunity to empower SMEs and then the informal sector. Okay, next slide. Okay, so digital transformation imperatives. One beautiful thing about any innovation when it comes to banking is that it requires infrastructure, right? Technology infrastructure. Okay, so there has to be that idea or that knowledge to understand that so a few things need to be done, right? Are we upgrading our current banking infrastructure to suit this? Yes, we'll need to do that. Like I mentioned earlier, some banks have already started updating their core banking systems, right? And of course, these updates put into place the PAPSS innovation, right? So let me just mention this through the slide. We have technical integration, leveraging PAPSS' robust API capabilities, and then core banking modernization. Then we move into leveraging mobile banking platforms, integrating PAPSS directly into what we use daily, right, for the mobile banking and online portals. Then, of course, utilizing data analytics for monitoring transaction flows, right? And then employing AI. Of course, the world is moving through AI. I'm even certain that there are some certain banks currently who have upgraded their core banking systems using AI. So that's to tell you the innovation at which the Nigerian banks are going. And then we need to also embed this into that so that we can be more efficient. And then finally, cybersecurity as a core competence. Now, this is very important. As we keep innovating and we keep implementing, we do realize that the individuals who are, for lots of words, the scammers per se, are moving at the same trend or at the same speed as us, the innovators, right? So that being said, we need to make sure that our innovations are safeguarded, right? And that way, we bring in the cybersecurity as a core competence when it comes to recruitment, when it comes to, whatever, when it comes to implementation of whatever technology platforms you want to use. Cybersecurity has to be a core competence, and this will actually assist us curb the fraud rates across the banking systems in Nigeria. Okay, next slide. Okay, so what exactly would be the key challenges for Nigeria per se, or Nigerian banks when it comes to integrating or implementing PAPSS? So first of all, we're dealing with legacy core systems. We have a lot of banks who are, we have a bank who's over 100 years old currently in Nigeria. So we have a lot of banks who have legacy core systems that weren't designed for real-time cross-border flows, right? So there has to be that part, like Becca consistently said today, we will need to consistently upgrade our core banking systems, right? And also upgrade, the human capital per se in terms of workforce, right, for reskilling. So let me go through the slides. Operational hurdles, legacy systems, like I said, and then staff readiness. I did a sort of research. I won't call it a survey per se last week, where I met two individuals who work for two different banks, and I wanted to understand how ready PAPSS, right? These individuals had no clue what PAPSS was. So the question is, as we banks are moving in the direction of innovation, right? We need to also get the banking staff ready, okay? Push and upskill staff to understand these new innovations, right? As we move on, or introduce, like I said, cybersecurity, so it can boost staff and let staff get to understand and know that there is an innovation going on. The second one is human and capital dynamics. And this is more or less around staff who are very used to what they do, right? So I'm sure we know that one of the challenges of innovation is people who are resistant to change. Whatever it is that we're doing from a program management or a project management point of view has to be embedded using the change management blueprint, right? So we need to understand that change management is important, and create different strategies across change management that can assist staff, come out of that shell of being comfortable with what they do. Regulatory complexities is another one. Now, we're talking about cross-border payments across Africa, right? But we do realize that we don't have the same regulatory bodies. The CBN controls Nigeria, has its own policies and regulations. Kenya has its own central bank, which has its own policies and regulations. South Africa, Uganda, Rwanda, right? So there has to be harmonization across borders when it comes to regulations or regulators, right? This harmonization has to be done before any form of go live, right? And that's very important so that we can have seamless transaction use across board. And of course, government hesitancy, right? Yeah, how ready is your government towards change? But I'm going to focus on harmonizing across borders, focusing on the regulators. And then the final one we have is hedging needs across. This is due to currency volatility, right? So we need to create products that could assist us to hedge in case of these volatile currencies. Okay, next slide. Okay. Now we look at strategic initiatives for success. So to successfully navigate the transformation and leverage PAPSS, Nigerian banks must be guided by the following different KRAs per se. So the first one is leadership and vision alignment. Successful transformation demands top-down sponsorship. The CEOs and boards must champion PAPSS as more than a compliance initiative, right? So that is important. Then also establishing guiding coalitions, across board. So in the different silo banks that we have, we need to mix teams from technology, operations, risks. This is to break silos and maintain the momentum, right, when it comes to aligning the vision across board. So the next one is, or the next key result area, KRA, is customer-centric digitization. Very important. Who are the people that are going to use this new innovation, right? I've mentioned pushing PAPSS into mobile apps, into web platforms, right? That basically means that we are saying that we want the banking customers to be the ones to use this, right? Now, as we will need to now understand that to do that, we need to think of the customer as the first point, right? What are the different designs and interfaces that needs to be built to make sure customers have seamless use and integration while using the app? Basically, they have a seamless journey. There are no issues, right? And then looking at new product development too, right? As we start to use PAPSS, we need to understand that we need to get customers to tell us their pain points. And these pain points can assist us either improve what we've done or build new products that can come up from that. Then we have workforce empowerment, right? Rolling out role-specific trainings on PAPSS processes, digital workflows and compliance standards, building future-ready skills in a few key areas, e.g., data analytics, cybersecurity, like I mentioned, anti-money laundering, blockchain. This is it's very important that the bank needs to build this. And then cultivating an agile and innovative culture that embraces change. Then we have process optimization. Performing, business process reengineering is very important to streamline operations, eliminating manual steps, and then achieving straight-through processes. That's one. And then two, taking the full advantage of the same BN simplified KYC anti-money laundering rules for low-value transactions, right? And that's very important. Then ecosystem collaboration. It is time that banks start to collaborate or build partnerships with fintech startups or the fintechs that currently play right now, the mobile money players, and then federal banks on how to push PAPSS, or basically get PAPSS to spin off. And then finally, building a robust risk management across board. Okay, next slide. Okay, so what is the roadmap to approaching this for Nigerian banks? I've put it in 3 phases here. So the first phase is to set foundation and integration. I think that's what we are doing now. If you have started, right? Gap analysis, API integration, and core banking upgrades, pilot programs, training and communication, KYC optimization. So that's more or less the first stage, right? And a few banks are already doing that, and that should take nothing more than 12 months to complete, right? The next step is optimize at scale and expand, right? Which is full digital integration, complete PAPSS rollout, straight-through processes, advanced FX services, SME product scale, security ramp up, and then continuously developing what we've done. And then finally, innovation and leadership, which is the final step. So as we've gone through implementing PAPSS, what are the new things that can come up after we have figured out what customers are saying in terms of their pain points, right? What the customers want? Are customers happy with what we've done? Do they want us to build more things or put in more plugs into this to assist them, in their journey, So that's one part. Then we have deeper partnerships, like I said earlier, with each of the different financial players, and then of course Nigeria is going to be the champions of this inclusion per se, because we are more or less the forefront of Africa. So we're going to champion this, and what we have there, and yeah. So basically, and then policy leadership. Now, of course, like I said earlier, the CBN is actually happy to push this, right, and has pushed in circulars. But we need to understand that we need to, the banks need to use this opportunity to engage with CBN better, right? So the CBN can assist the bank in other innovative ideas that banks would have. And that will go to the next slide, where we now have the recommendations for Nigerian banks when it comes to PAPSS. The first one is to treat PAPSS as a strategic differentiator. Position PAPSS as the heart of growth strategies, driving profitability, market share, and African-wide economic independence. So we have to invest deeply in people and culture. Address workforce anxiety when it comes to change management, process automation too. Like some examples are in my past life, heading an automation program. One of the things I realized is the anxiety, because because staff feel that once they bring in automation, if a lot of them would lose their jobs. So that anxiety needs to be addressed, and then embedding a culture of innovation and adaptability. Then we have championing ecosystem thinking, actively seeking and nurturing partnerships and collaborations with players in the ecosystem, prioritize cyber security and risk management, and then finally, adopt, measure, learn, and have the iterative mindset. So that will be where I will pause today. My final note would be that I don't see Swift as totally ending. I think that Swift would be once we go live, because if you look at what CBN has pushed when it comes to their new policy around this, their focus is more or less around transactions that are small, so smaller transactions, right? And that would be beneficial for PAPSS at the start. When it comes to large transactions, we might still continue with Swift, but of course, if you look at the ratio of large and small transactions holds more in terms of count. So that will be pushed towards the African scene, where we'll now introduce PAPSS. And once we get this live, I believe that it will be more efficient. There'll be lower cost to serve, and then innovation, more innovation across, and SMEs can use this idea to expand their reach across their continent. So thank you for that question.
Okay, thank you so much, Mr. Hartley, for that wonderful session. I'm going to do a quick recap of what has been said before we go into the question and answer session. I see quite a number of questions that we have for our speakers, so I hope you're still available, and I hope that you're ready to respond. Once again, thank you so much for your wonderful insights and teachings. Hilary talked about looking at the problem from an Africa-wide perspective, where we are talking about value trade for Africa. I'm just learning for the first time that when I try to send money from a domiciliary account to another bank in Nigeria, that my money has to travel all the way to another country before it comes back in, which means that there's such a wide gap of what we need to fix when it comes to inter-African transfers. And then also understanding that even down to our trade, we have only about 12% profit that comes back into Africa. That is crazy, out of 100%. So there's still where we need to do more, where as a continent, as a country, we all need to contribute to the financial space, because at the end of the day, it benefits all of us, which means that we need to develop our payment infrastructure landscape, legal framework, our governance structure, everything around the financial sector sort of is looking like it needs an overhaul. And that's what we're looking to our regulators, our fintechs, and our banks to do for us. And then Hartley talks about the pain points around down to PAPSS being implemented, and then what next steps would look like for us. Of course, the roadmap for banks, the strategic initiatives, and recommendations. So for the first question, I know Hartley touched on it at the end, but we have a question that speaks to Swift, which is, do you think PAPSS will replace Swift for intra-African payments, or can they coexist? Hartley, if you're still on the call, this question is for you, please.
Yeah, I think I tried to address that when I said, as if I knew that someone was going to ask that question. So coexisting is it? Yeah, so you would always need Swift. So I wouldn't say always. So let's break transactions into different variations in terms of value, right? So we have small transaction value, we have high transaction value, and so for those transactions that the values are quite much, right, and it requires other continents per se. Yeah, so more or less we are going to be using Swift. But if we look at the data Hillary might try to assist me with that in terms of confirmation. We have more or less the smaller value transactions as having the bucket share than the high value transaction. And that's now where PAPSS comes into play, right? So the small value transactions would now be what PAPSS would do for a start. Yeah, so that's more or less looking at it from a start. As we move further and we implement stuff and the years go by, so many things can happen, right? Innovations can come to it's possible that PAPSS would be better than Swift and people will start to use PAPSS instead of Swift. So yes, that could happen. PAPSS could end up pushing Swift away. Very possible. But for now, they are going to coexist. Hello, can anybody still hear me there? Sophie, can you hear me?
Yes, we can hear you. Can you hear me?
Yes, I can hear you. You just stop talking.
All right, I said thank you so much. I was muted, sorry. I think my system is lagging. So I have a question for Hillary. Hillary, please, are you with us? Hi, Hillary. Try 1 second. Sorry, guys, I'm trying to confirm that our second speaker is still here. I think he might be having network issues.
Yeah, looks like he dropped off. It's not here anymore.
Okay. So we'll send the questions to him so he can give feedback. We have the emails of the speakers, so if you have more questions, you can reach out to them. Okay, I see him in the. I'm trying to get him back. Try 1 second. What do you know?
You hear me?
Hi, Hillary. We can hear you now.
Okay, excellent. My apologies.
Yes.
Got
Welcome
locked out.
back.
Yes, happy to take your questions.
Okay. So the question I have for you is, how do you think PAPSS inclusion would work in the underserved regions in Africa? So the person says, would you call it an inclusive ecosystem? Would it make for an inclusive ecosystem?
Absolutely. I think PAPSS is the ultimate inclusion engine, because right now, very few, even if you want to send money to any of the other regions on the African continent, apart from the fact that it is difficult to do so, the charges are not clear, it is not transparent, and you don't know when your recipient is going to get the money. PAPSS solves that problem for you instantly. You get your transaction is done in 20 seconds. Settlement is final. PAPSS has a framework for resolving conflicts. In fact, I remember Hartley saying something around harmonization of regulation. The governance model of PAPSS is such that you have a a PAPSS governing council that is made of all the central banks where PAPSS operates. And there's a PAPSS oversight committee that is made up of 2 central bank members whose job is to harmonize the regulation as well. So to the extent that the country in question has provides access to its citizens, as long as that country is in PAPSS, is signed up to PAPSS, you have access. So, I mean, the answer is yes. So
Okay.
for the player, it's just plug and play.
All right. Thank you so much. So
Yes.
another question we have here is, what role can fintechs play in helping smaller banks become a part of this? Do you think there'll be a dependency on commercial banks, or can fintechs run this?
So it's a function of maturity, right? Because an ecosystem is only as secure as its least secure member. Okay, so what happens in this system is that as long as you are able to meet the regulatory requirements to be able to sign up to PAPSS, then you have access. You have access. The way PAPSS is designed is that PAPSS has what I'll call payment rails, credit payment rails, debit payment rails, and whatever innovative products you have, right? They devolve into 2 things, either a debit pull or a credit push. Whatever front end product you want to present to your customers, that's for you and your customers. But at the back end, what PAPSS does is that it provides you the certainty to ensure that settlement will take place, your transactions will not fail, clearing takes place, and you are doing it in an environment where you will not wake up tomorrow and the party on the other end is not able to settle or give you the funds, which represents the biggest risk for a payment system, settlement risk.
All right. Thank you so much for that. Somebody else is asking, when it comes down to the failures around the system and adoption, is there anybody that reports on this? How do we basically track that the platform is working, or the system or program is working? Are there things in place to address where there are failures?
So first of all, one of the key elements, key principles on which PAPSS was designed is transparency and availability of information. It's a public duty, right? That the central bank leaders hold the managers of PAPSS to. So first, when you integrate into the platform from a technology standpoint, you have real-time information on the availability of the system and the services that you are using. Okay, so you get feedback, you have access. In fact, the system is able to work if technology fails, settlement will still not fail. It has been designed that way. Now, whether or not, no, I think I've answered your question, basically. Yes, you will get information about the level of the functions, the services you are using, and there are failover systems in place to ensure that even if all the systems are offline, your payments will go through.
All right. Thank you so much. I'm sorry, guys. Please give me 1 second. Let me get another contributor. I'll see you back up. We have a lot more questions. I think we'll just be able to take 3 more.
But can I add to what Hilary said, please? But this
Sure.
is coming from a customer-centric point of view. So that's one part of it when it comes to systems put in place, right, to address efficiencies. The other part is customer complaints, right? So, and I believe that each silo bank's contact center would be in charge of that. So I think that will still continue, right? I would prefer that the banks dedicate a special team focused on complaints concerning PAPSS, that could actually assist in terms of customer centricity. Of course, you need to find a way to mitigate the issues you're having with your customers, more or less changing the perception. So yes, that's one thing, one part for the settlement part, and the other one for customer centricity. So hopefully that works.
Okay. Thank you so much for that contribution. Sorry, let me reach the question. I think someone is asking about metrics. Yes. So welcome back, Shay.
All right, thank you.
Do you have anything to contribute to some of our questions?
Yeah, I mean, I was following the conversation. The one thing I wanted to add was there was a question around where do fintechs plug in to the ecosystem. I think Hillary took that quite well, that it would be a function of like the regulators and how they decide to then implement it. But specifically to Nigeria, if you remember when I started, I said that there are quite a number of policy conversations that are happening, one of which is like the open banking policy that is being put into effect from August. What that does is that it opens up a language, a layer for various levels of innovations for the fintechs through that platform. So gradually you'd find out that things will be rolling out. How does that work? Essentially, the CBN would provide a layer as well as a registry for the for the commercial banks or the players who have those licenses that can carry out cross-border payments and the rest. They provide a layout where they can then expose those services to the financial innovators. You then need to meet certain requirements. Those things are detailed out. There's a procedure for onboarding third parties. There's a procedure for managing consents when it comes to privacy. And then you as a fintech can then build out an innovation that layers this, this technology or these APIs really for enabling that. So we expect that these things will be rolled out in phases. There'll be many other innovations. Today, banks, without open banking, banks provide PAPSS services. Fintechs provide PAPSS services. So for as many that have the right licenses, the right frameworks, there would always be like, and PAPSS, by the way, is banking as a service. There would always be a layer where APIs would then be exposed for you to innovate upon.
Right, thank you so much, Shane. I have a question for you, Hillary. And I want to know whether there's any aspect of PAPSS affecting the investment banking space. There be any sort of influence on investment banking?
Of course. So what do investment bankers do? Investment bankers make investments, right? They invest in green investments, brownfield investments. They move markets, right?
Yes.
And at the back end, what they do is, in fact, the investment bankers are the ones that do the major high value transactions, billions of dollars in transactions. An investment banker can do one transaction a month that can be $1 billion, right? Now, the clearing and settlement that is supposed to take place with regards to those transactions typically happens using corresponding banking relationships. PAPSS can now take care of that because, first of all, you have a system that plugs into the central bank. So essentially, you are plugged into the FX supply of the country. Each direct participant can also use its own FX reserves for clearing and settlement, right? So you can use that of CBN, you can use your own if you so decide, and it's seamless. So you have settlement finality. You are not worried about what is happening on the other side, whether the other person is going to get the money or not. And the kind of parties that are involved from the back end, you have the Committee of Central Banks. In fact, in payment terms, settlement in central bank money is as certain as it gets. So if you have a system that does settlement in central bank money by international global standards, that is as safe as you can get.
Okay. That's very interesting. Thank you so much. And then our final question is, what roles would you say private infrastructure providers play in accelerating PAPSS deployments? Are there any partnership pathways being considered?
Is that question is for me, right?
I think Hartley can contribute, or Hartley, do you want to take the question?
Can you take the question again, please?
What roles do private infrastructure providers play in accelerating PAPSS deployments, and are there any partnership pathways being considered?
I think Hillary would be the best to take this question actually, because it's a technical question. So Hillary, maybe you should try.
All right. So infrastructure providers underpin payment systems, right? So right now, if you go on your phone app, you want to make a transaction, you are either going on MTN, Glo, or any of the other mobile networks. You are connecting to NIBS or any of the payment gateways. So from a service delivery standpoint, infrastructure providers will always have a role to play. The question is, can an infrastructure provider play as a direct participant in PAPSS? Not likely, because direct participants are expected to have accounts with the central bank, they expect to have banking licenses, they expect to have banking customers to whom they are offering banking services. Infrastructure providers can underpin the systems on which PAPSS runs, and you can do that from the front end, right?
Yeah.
Or you can do that for PAPSS if you are able to secure that business arrangement.
Okay.
Right.
Thank you
Let me
so
just
much.
And just to add to that, right?
Yes.
What you'd find out as you go deeper into what the policy entails with a number of the solutions is there are certain standards that the participating players must adhere to. Now, as part of those participating players, let's call them the commercial banks, for example. If I need to be compliant, when I'm rolling out a downstream service to another participating player, let's call that a third-party provider, right? Now, those standards also need to be adhered to for them to be onboarded into the network. Now, what you find out for a lot of these private players is that it then opens a world of opportunity for downstream work. For example, if you need to be, say, PCI DSS compliant or some kind of certification, you'd realize that there are certain conditions that present opportunities at the infrastructure level as well. And then you see that cascading effect will open up those opportunities, even though you're not a direct player on the PAPSS network. Yeah.
Wow. Thank you so much, Shane.
Sophia.
Yes.
So let me provide a perspective to the investment banker.
Okay,
so
sure.
part of what you can do in clearing and settlement of securities, what you have in most countries is that you have an integrated relationship between the stock market and the financial system. Now, typically what happens in clearing and settlement of securities is that you have payment versus deposit. So the asset is dematerialized, and within the central securities depository of the country, when the asset is moved, payment is made, settlement takes place. Now, if let's say you are an investment banker in Nigeria and you want to make a payment to an entity in South Africa on the South African Stock Exchange, with PAPSS, once PAPSS is locked into South Africa and locked into that, you can do it from Nigeria and the payment will go through and you are sure that what you are doing is 100% okay. Now, that's an example of how some PAPSS can impact investment banking, investment across markets, Egypt, South Africa, Algeria, wherever the case may be, as long as the relationships exist and they are signed up to PAPSS and they're integrated.
Okay. I know I said that was the final question, but for Hartley, what would you say is the contribution from the regulators? I don't think we've spoken from their perspective. What's the role they would play in all of this?
So I did mention the regulators at the beginning of my conversation, and they are fully in support of this. I mean, of course, before the banks even start to push anything like an idea, the regulators have to have a hand in it and give a go. So I mentioned the circular that was passed on the 28th of April from the CBN mandating the adoption of PAPSS across financial institutions in the country, especially banks. So yes, the regulators have a more or less forefront and are happy, to push, or to assist the banks in pushing these initiatives. They've also helped to simplify a few things.
Yes.
From that circular, you can see that they have tried to simplify the KYC, which is know your customer, for smaller deals, when it comes to cross-border payments. So the KYC part has been more or less simplified, just so that it can help the banks adopt this initiative. So it's one of the things that CBN is doing, and the idea is to empower the banks to source FX locally without needing to tap in this from the CBN directly. So giving the banks the leeway, this is the policy, assisting them with KYC, etc., and then eventually the banks can now be able to do what they want to do. So yes, the CBN is fully invested in this. All
right, thank you so much. Wow, this has been, my mind is blown. This has been very insightful. Thank you so much, Sheyi. Thank you, Hilary, and thank you, Hartley, for joining this session and for taking us through some of these insights and really sharing your wealth of knowledge and experience with us. To our wonderful audience that have been very engaging, you've been great participants. Questions have been eye-opening. So I want to say thank you for your taking out time from your busy schedules and day to join us. If you have any other questions, you can send an email to us, or you can send an email to the speakers to just engage with them and get to know more. So I just want to say thank you to all of you for joining. Sheyi, do you have any closing out remarks before we end the session?
Yeah, just to say that, again, so that we're not lost in the technical delivery of this,
Yes.
there is an overarching purpose of getting the knowledge, getting the insights around how a Pan-African payment systems works, right? And the purpose there will be, how do you plug into a global trade? How do we use this to expand businesses? How do you use this to drive opportunities that are coming, and to be aware of those opportunities? So my takeaway for our audience, who have been fantastic, by the way, is to keep the conversation going. I think this is the first of a number of series that we're doing. What this did is to provide a foundation. We will then move into other aspects as to how do we then localize this. Some questions came around fintech, some questions came from the regulatory side, some questions were very domain specific. I think what we'll do is just to take the feedback, and then we want to schedule more that then speaks to more closer domains, and then drive home the application sides of it. A lot of people might look at this and say, okay, certain things are in policy stage, or certain things haven't kicked off yet, and so on. But things move extremely fast once the real tracks are set. And that's the reason why, in preparation for this, we're making this for everyone aware. There are also businesses that might be thinking, what's the next stage in terms of execution for the organization? I mean, that's what Turok does. So feel free to reach out. I think you can follow us on our social handles, or our info at Turok, or on our contact us page. And the idea is that we can engage and have more specific conversations around transformation in light of these developments. So thank you all, and it's really been wonderful hour and a half with you.
All right, everyone, let's have a wonderful day. Thank you once again to our speakers, Hilary and Hartley, and to our wonderful audience. Enjoy the rest of your day. Bye, all.
Everyone, have a nice day. Bye. Thanks, Sheyi. Thanks,
Have a nice.
Hilary. Thanks, Sophie.